Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about Alibaba, which is having once again issues with regulations, and it has been a very bad month for Alibaba in terms of issues related with rules and delisting and now the antitrust, which it is hammering down the stock. At the moment, $258 and down 2.40% today. So we are gonna talk about that. We are gonna try to understand what is going on and what am I gonna do, because you know that I have a position on Alibaba as well as JD.com. So we are gonna take a look at that. And as always guys, the only thing I ask you is please leave me a like. It's very important for the channel. You help me to reach more people and I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so first of all let's take a look at the graph. This is Alibaba and it is a daily chart, and we can see how this moving averages at 11 and 22 periods has been very helpful to understand actually the movement of the stock price. We can see we went a top of around 315, 319 in October, end of October, and then we had the IPO Ant Group, which has been cancelled. And then boom, this drop, bottom out and 251.88, and then kind of went back up, and then the issues with the US delisting threats, and then once again boom, down. And now we are basically here in this range between 250 to 265, which is where I've entered the stock over there at this black line. We have graphically a very strong support. It is an area basically that goes from here up until 240. It's a very strong support area, and I think that Alibaba will continue to remain inside this green rectangle over there as long as these short-term issues with all the regulations will continue to go on. It is sad, I know that it is a brilliant business, but stuck in this negative circle, both from China and the US, which is cutting the wings to a wonderful business. So the short-term turbulences, as I warned you in the previous videos, I made numerous videos about it, it is not an easy thing short-term for Alibaba, as well as JD.com, as well as Tencent. All the Chinese stocks are not in a good mood in terms of regulations right now. But let's take a look at what happened. Here we have, this is from the CNBC, just from tonight, basically this morning. Alibaba and two other firms fined for not reporting deals to Chinese regulators. Alibaba, Tencent-baked Chinese literature, and Shenzhen Hivebox Technology were each fined 500,000 yuan, which is a really pathetic sum of money for them, so $76,000, by the State Administration for Market Regulations, SAMR. While the fines are small, the SAMR's moves signals further intent from Chinese regulator to punish and regulate technology firms. So this is why the stock are down today, and not because of this amount of money, which is ridiculous. They can actually pay it in a second, but this is the problem. So right now, this is similar, reminds me of Facebook, okay, a brilliant business, but sometimes it is always in the middle of this kind of bothering stuff with regulation. China's market regulator has fined Alibaba and the Tencent-based company for not making the proper declarations to authorities about past acquisitions. In another sign, Beijing is taking a tougher stance on the country's tech giants. While the fines are small, the main issue is that the further intent from Chinese regulator to punish and regulate technology firms, many of which have grown largely unencumbered over the past few years. transforming themselves into a key part of everyday life in China. Last month, the SAMR published draft rules looking to stop monopolistic practices by internet platforms. It is one of the most wide-sweeping proposals into China to regulate large tech companies. The SAMR issues are related to Alibaba's move to take a controlling stake in department store operator In Time, China's Literature's acquisition of New Classics Media, and Hivebox's acquisition of China Post Smart Logistics. None of the acquisitions, however, restricted or eliminated competition. Instead, the fines stem from the companies not to properly submitting the paperwork required by current monopoly laws. So the problem here, guys, is that when companies are becoming bigger and bigger, they hit against these kind of rules and anti-monopoly rules. We have seen similar stuff in the US with Amazon, Facebook, Google, these kind of companies. So the main problem is not the fine itself, which is a ridiculous amount of money, but it is the fact that the SAMR is basically giving a warning to these companies, and they say, look, we are controlling you, we are looking at you. If you go too far, we are gonna do something about these monopoly issues. And so that's the main problem. And now, what do I think about it? Honestly, this comes the delisting issue together with the IPO of Ant Group issues for Alibaba. Now, honestly, this is a weird situation because, as you know, I am invested in Alibaba and JD.com, and I'm really confident about the future of the Chinese economy. Okay, so I do think that in the next 10 years the Chinese economy will explode. Now, the problem in the short term, guys, is that if you want to be invested in this company, you have to resist these kind of issues, and there will be probably even more in the short term, simply because it is a country which is developing very fast, and as always, rules problems always comes when something like that happens. Okay, so there are businesses which are exploding in terms of how well they do, and the rules have to actually keep up with the expansions of these businesses. And honestly, during the last months, it looks like that everything went bad. However, when we take a look at the business related stuff, we are gonna have probably the best quarter for Alibaba, an expected revenue of 32.6 billion. The numbers, guys, the numbers are still incredible. You cannot change them. So the thing is, guys, at the moment, it is like you are having, let's imagine, the best athlete in the world is gonna perform very well, but if you pull away oxygen from it, it's not gonna do well. Okay, so now if you remember my first video that I did on Alibaba, I warned very much about these kind of problems, and some people just wrote down that I was probably being too drastic about it, too drastic about regulations and stuff, but this is the real problem. Those businesses are incredible, and the prospects of growth are awesome. The main problem is regulations. So what do I do? Am I gonna sell? Am I afraid of it? Absolutely not, guys. As I told you in the previous video, I am still 85% invested in US stocks. And my position in China, it is for a terms of 10 years from now, okay? It is not tomorrow. So in terms of economic growth and long-term perspective, I remain very confident about Alibaba, about JD.com, about the retail market as an overall in China, which just simply because of the incredible number of people who live there, and also because of it is evolving very fast. The population, the GDP is going to increase. The Chinese economy is going to become the first economy in the world. All these kind of things in a 10 years from now are the reason why I am not selling nothing. Now, obviously, if you are worried about the short-term issues, and there will be probably more coming on in the future, okay? I'm not sure about that. But you never know when it comes to government regulations, okay? It is kind of random sometimes. So if you are worried about these kind of things, guys, then probably it is better for you to stay away from these companies. It is your call. My view is in a 10 years from now, okay? So I'm not worried about what is going to happen tomorrow. What I see is a very great potential in what is going to be the top economy in the world, very likely in 10 years from now. And those are the top companies there. I think that in the long term, this kind of stuff will eventually end. And when that happens, if China is able to actually create trust in investors, I think that these companies will explode. As of now, they are the most undervalued things that I am seeing in the market, JD.com especially. Honestly, if you are worried, if you are afraid about short-term turbulences given by tensions, politics, regulations, then honestly, stay away from that. While if you believe in the long term of these companies, well, then it's your call. Mine is that I will remain invested in these companies. Obviously, I'm not 100% in them, so I remain just a 15-16% invested in these companies. As I showed you in the valuation, once this issue has completely gone, I see actually Alibaba above $300, easy in terms of a fair price. What keeps that price out of the equation is external issues which are not related to the business. So it is your call, guys. Are you willing to hold and actually resist these kind of short-term issues or not? So in my opinion, with my view of a 10 years plus, I remain positive about it, okay? Obviously, I'm not happy to see, especially during the last 40 days, which everything has been negative. We haven't even talked about the Alibaba business, never, just issues with regulations. It's like it's just only an issue. But in my opinion, it is an incredible business, as well as JD.com. Once these things are gone, well, that's where I'm gonna be happy with these companies. So that's my bet, guys. Obviously, I accept every comment down below. Tell me down below, what is your bet? What is your thought? Do you think that these issues will go away eventually or will continue forever? And stocks like Alibaba, they will never recover from it. So leave me a comment down below. Tell me your thoughts about this very strange situation. And leave me a like if you find this video interesting. Subscribe to the channel. And as always, guys, have a wonderful day.